Good morning and welcome to our video this morning. My name is David Miles. I'm an investor and a coach with Cash from Options. That's the name of my company. Down here we have the website. If you'd like to know more about us and more about me and my strategy and how it works and what we do, you're welcome to look at that. And my email address, if you have any questions, david@cashfromoptions.com. A little bit about me. I've been a stock option investor since 1985. I learned it by trial and error, the strategy that I trade today, and that was an expensive way to go. I recommend coaching slash mentor. You can look over my shoulder as I trade and save you a lot of time and effort and money. I've been a certified coach for Robert Kiyosaki's stock market investing program for over 11 years. And again, as I mentioned, I teach my clients to earn weekly paychecks by trading weekly stock options. Is the bull still charging, or are we in a bear market? The reason that the bull is the representative of a rising market is because when a bull fights, he lowers his head and he sweeps up with his horns. So he fights by sweeping his horns up. So he symbolizes a market that's moving up. A bear, he fights by swiping with his paws down. So the bear has come to symbolize a bear market or a market that's lowering. So if you knew to a high probability if you were in a bull market or a bear market, would that make you a more profitable investor? Would you be able to manage particularly your 401k, 403bs, your IRAs, that kind of thing? If you could just be out of the market when the probabilities are that it's going to be going down, you're in a bear market, and then when that changes and then you enter a bull market, that's valuable. It's a simple strategy and system, and I'll show you how to do that. Don't let the simplicity, don't overlook it because it's simple. It's very, very accurate. What you will need, a stock chart, and we'll look at one in a minute. I recommend tdameritrade.com. When you get to that website, search for Thinkorswim and download that to your PC. It's free. You can do a virtual account or a paper trade account for free. And on that chart, you want a 35 and a 60 week simple moving average. And I'm going to send you an email with instructions on how to set up your chart, and you'll know how to work it after looking at this video, and you can review this obviously as many times as you want. Okay, let's look at a chart. Here's the Standard & Poor's 500. This is going back until about 1995. By the way, the market was trading about 350, 400 points. Today it's up over 4,000. That's a big, long bull market. Again, started in 1995. But basically how this works, and it's very simple. These are this line right here that I'm highlighting. It is the 60 week moving average, and the one below it right there is a 30 week moving average. It's right there. So the longer, slower moving average is the 60-day. The faster moving average is the 35-day. Again, I'll send you an email on how to set this up. Basically, it's very simple. When this faster moving average, which is this 35-day simple moving average, crosses from below, penetrates the 60 week moving average, it signals the beginning of a bull market. And you can see there that it certainly did that. Now, when it's above, and as long as that line stays above, the faster moving line is staying above the slower moving line, the 35-day or week is staying above the 60 week, you're in a bull market. When that line 35-day penetrates it from above, that's the beginning of a bear market. And look when that happened right there. So this crossed to the upside, up it goes, here it crossed, signaling the bear market, and down it goes. Wouldn't it be nice to be in here? Get rid of that. to be in the market here and to get out right there. And then when it comes back down and then breaks through to the upside or above the 60-week moving average, that signals the beginning of a bull market. And there you go. Here is a crossover from the upside to the downside, beginning of a bear market. You'd want to exit your stock position, go into cash. Takes 1 day, very easy to do, in your 401k or whatever, and down you go. Excuse me. Here we go. Breaks to the upside. Now you're in a bull market. Let's get back in the market. And away it goes. Let's pick it up right about here. Here was the meltdown, the subprime mortgage meltdown right there. What a mess that was. The market was trading at about a 1550. It dropped to a low of 650. Ton of money to be lost right there. But here's the signal of a bear market. The faster moving line above crosses through the slower moving line below, and it signals time to get out of the market, get into cash, get into fixed guaranteed, low risk. It'll be low interest, but better than taking this loss. That was a huge hit. Sorry about that. So good time to be out. Now here it signals, well, let's get back in. And up it goes. As long as the slow moving line stays above the fast moving line, the 35-day stays above the 60-day, you're in a bull market. Now it comes down. This does not penetrate. It did not signal the start of a bear market. It hit that line and bounced right back up again. Stay in the market. It did the same thing right here. And it did the same thing right here. Here's a big panic period setting in. This is about a month long, 6 weeks. People are saying, is it a down market? Is it an up market? You know, they're panicking. Sometimes they make emotional decisions, which are usually wrong. But no, the line never penetrated from above. It's a bull market. And then up it goes. And here we see the 35-day penetrating from above the 60-week moving average. We're in a bear market. Let's be out of the market. And you can see it's been going down. Now, one caveat here. If it crosses below, I'm talking about the stock prices here. If it crosses below the 60-day moving average, to avoid the panic and emotional selling, just go to cash. If it drops below, go to cash. If the 35-day does not penetrate the 60-day, get back in when it moves back above it again. You're out for a little bit. Peace of mind is well worth it. Here it is again. Okay, let's get out right here. And it comes back in, moves back above. It did not signal the beginning of a bear market. We're back in the market. Here was a big one. It hit a high of about 33.79. It came down to about 21.83. That's about 1,000 points. That panicked a lot of people. So just get out here. It crosses below the slow moving average here, the 60-day moving average. I keep saying day, but it's week. You get out and then you get back in here. You get out and you get back in here. It never signaled the beginning of a bear market. Right here on about the first part of June, it signaled the beginning of a bear market. This is when you want to go to cash, fixed guaranteed interest rates, and there you go. So very, very simple. When the fast moving line penetrates from above the slow moving line, we're in a bear market. When it penetrates from below, 35-day crosses above the 60-day, we're in a bull market. And just get right here, go to cash, takes 1 day, go back in, takes another 1 day. You'll make a lot of mistakes here typically if you're not a seasoned investor, because it just looks like I'm getting out of here. So when it goes below, get out. When it comes back in, above, we're good. This was the first time it crossed in a long time. Signal the end of that bear bull market. Okay. Go back to and that's it. It's very simple, very easy to manage. Send me an email with any questions, and I will send you. And you guys are my clients. I'll send you a email on how to set this up. And you look at it once a month. It's just it's boring, but you don't have to worry about it. You just check in. It takes you 5 minutes. No, we're good. We're still in a bear market, but I'll send you how to set your chart up. And check out my cashfromoptions.com, my webpage. You can see the information there that I have, and hopefully that'll be very helpful to you. That's it for today. We'll stop right there and talk to you soon. Good investing. Thanks.